Dan Holmes here from Feedzai. Welcome to this week's weekly update. This week I want to talk about some regulatory change that's been announced by the Monetary Authority of Singapore. There's been a huge spate of digital fraud and scams in the region. The fraudster initiates a phishing attack with the customer, so that means sending them a bogus email or a bogus SMS. The user clicks on the link and they're then taken to a website that looks legitimate, and they divulge personal information that allows the fraudster to subsequently access their online and mobile banking platforms. The regulatory change has been enforced to force the banks to do more things to protect consumers. One, the regulator hopes to encourage the bank to interact more frequently with the customer from an education perspective, so inform the customer about these scams that are going on through a number of different methods, whether that be social media, letter, TV ads, radio ads, etc., so that when they receive one of these bogus phishing attempts, they're well informed enough to be able to ignore it and not divulge personal information. Second one is customer authentication. There's a big push towards moving customers into a mobile-first mindset. Mobile banking apps are very much seen as the secure channel within banking circles, meaning that the banks feel they can contain the problem more effectively if their consumers are using the mobile channel rather than the traditional web channel. The third thing is around technology, so making sure the banks have got the right controls in place to be able to detect fraud as soon as it happens. So not just stopping the payment as it leaves the account, but securing the customer's account in a wider sense, understanding as early as the login if it is likely to be the legitimate user. And then the final thing is collaboration intra-bank, sharing best practices with one another, and even involving outlets like the telcos so that they can potentially work to stop that SMS even landing in the consumer's inbox. And then just a few thoughts from my perspective around what the banks might need to do to meet these regulatory obligations and further secure their customers from these attacks. One would be adopting the right controls, not having 3 different fraud systems for 3 different channels, consolidating to a single platform, and using machine learning and scalability to remove reactive rule-led strategies, which are only effective for a certain period of time and frankly can be very difficult to maintain. And then the second thing, getting consultancy guidance around what best practice on education and authentication mechanisms should look like. The US, the UK, other parts of Europe have already been through this curve, so consulting with people that have experience in different parts of the world will really help the Singapore industry get it right. Thanks for listening. That was your weekly update.